This is Simon with Trade and Perform Coaching doing a impromptu trade review for the day while the market's melting down. The reason why this day is so important is because it identifies a change in character in ES and NQ of which we haven't had in the last couple of days. So just because we have a potential change in character does not mean that the market is going to change. It's a heads up for what could change. So let's go through the factors real quick. Before I do that, quick disclaimer. This is for educational purposes only. This is my trade plan. I'm sharing it with y'all. Please do not follow me step by step. Make sure you understand the trade plan. You've taken your statistics. You know what you're doing, and you're following your own trade plan, right? I'm not soliciting you to buy, sell equities, futures, options, or currencies. You can lose a lot of money trading futures. Please consult your registered financial advisor, of which I am not one, and your risk trading plan before ever investing or trading any financial instrument. And finally, this is for educational purposes only. If I didn't say it, you can pause it and read the whole note. Okay, so if we look at ES, okay, from a day time frame standpoint, came in this morning, and we said, and all week long, that we had to get underneath this location right here, 2475, that we would like a backside test of that 2475 if it broke, right? And then that there was no real prominent locations below. That was this was the next prominent location, the 67, and there's one more location floating right down here somewhere. Okay, so what's happened? We opened up. We've got, how many days in a row have we had upside days now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Let's just call these all at the upper end of the range, right? So we had a whoosh. Here was the open gap. You'll notice there was no volume build between yesterday's gap. Here's the second gap. Notice again, no volume build. The volume build was behind it, right? So now, first thing you'll note, largest range day of the last 12 days. Number one note, change in character. The quicker you can change your market perspective, the easier it is to make money, right? Hands down, no question about it, okay? If we want to look, and so the next thing we want to go and do is go, okay, well, if there's a change in character, where can we look to see where there's been other changes in character? Well, the most obvious day that stands out is this date right here. So number one, notice that we plunged here, right? And we closed in the middle, not at the low. So that's approximately the 11th or whatever date this is associated with. Here, I'll get it for you exactly so everyone knows. That is the 9th, June 9th. Okay, so was there actually a change in character here? Well, number one, we had an increase in the rotation size. And then number two, you'll notice that we stopped grinding. We were already, this was a change in character, didn't close at the low. The following day, note that we gapped up and we failed. First thing that we would have had to do to have a true change in character would have been to get below the prior day's swing low. We never did it. We were in balance before, and then we went into a wider range balance after. So what was the change in character there? The change in character was the range expanded, but we kept the overall balanced character. What had to happen? We had to get below the swing low. So now you can put in your notes. Potential change in character, right? And what are we looking for? Increase in range. We know that it's truly not bearish unless we get below and hold below whatever today's low is going to end up being. Number two thing that we know, this was a similar environment. It was a couple of weeks ago. So we know that if we don't trade below the prior day's low, right? We've had two examples. There's another example right here. If we don't trade below that low, expect hard snaps back to the upside as shorts get trapped when they roll down. The other thing I would do if I were you is I'd go in and look at the change in character of the open between these days. So I'm not going to go do it because that's going to be my homework tonight, right? But I'd want to look at how the opens looked over here and then how the opens changed over here. I guarantee you there's a change in character between these 2 points, right? And then same here. I bet there's a change in character between here and a change in character in here. And I can already tell you we started making lower lows through here and lower highs. So that alone was a change in character. Notice that even on what's consistent on these big down days is if you try to short for a close on the low, you were kiboshed, right? So again, that's why I've locked my domes at this point. I'm not going to try to short anything at this point. If anything, if they'll give me a shot at my white zone below, I'll take that long for a snap back up because the majority of days on ES, we simply don't close lower, right? Next, I would anticipate that we're going to go into balance. We have two good examples that we've done that before. I am now know that I'm looking for pushes down and pushes back up. Hopefully what will change is that the white zones get backed up a little bit once I looked at the PA, so that we can take those white zones lower and push them back up from areas that have been untested. I don't know yet. We'll find out, right? Next, we know that 4-point rotations on negative 600 ticks have been working here lately. I would look to see, go back to this area and see what that looked like to make sure that's still the case over here, and that was still the case over here. Again, this is just a checklist I'm going down of our challenge as traders is to go, okay, if the environment has changed, how do I shift gears quickly, right, to so that I don't lose money, right, and I don't give back what I've made to this point, because we've been nailing location pretty nicely, right? So let's go through what we have. We want to go back and look at what the 600 tick looked like, and then we want confirmation going forward that the 600 tick gives the same response. Increased rotation in size is a potential here. If we don't trade below today's low, we're likely just to go back into balance, work out some more energy, and then push back to the upside. I really hope we break the low because that changes the game. What will that look like if we do? Let's go find out. So I'm going to give you all the dates. Y'all can do the homework. Okay, notice on this day is different. Why? We've broken balance, and even on a date where we've broken balance, remember, buyers are very much in control. We closed at the low, we traded below prior day's low, trapped back in, pushed hard, and went straight up, right? So now let's go find another place where there's a change in character. Change in character, right here. We actually closed at the low. Notice that we actually broke below the low and we balanced at the lower end of the range. Notice how few closes were at the low here. Finally, we gapped down, pushed a little bit, trapped back in, backside tested this what was established as a swing low, and we pushed back to the mid of this range and finally come back to the scene of the crime all the way back up. Once again, getting bearish in this environment is not a good thing, right? And then the last piece is the changing characters are getting absorbed, and we're almost always going into some variation on balance. So guess what I expect tomorrow? Balance day, not a directional day, right? Now, this would change if we get below and hold below today's low in both NASDAQ and ES, right? We want to see if we expand the range overnight. That'll be our other clue, right? And then lastly, we know we want to fall back to our 10, if you're uncertain of your location tomorrow when you're trading, right? That means you want to fall back to your, 10-point rotations, at negative 600 ticks, or 5-minute tick divergence until you see if the PA balances out again. Remember, Friday and Monday are the two narrowest range days of the week. I'm trying to go through this quickly so it doesn't turn into an hour-long marathon, right? And I think I covered all the bases that I'm looking for there. I'm trying to see if there's anything else. Oh, see how all these closes here are right here at 2467? If we close above 2467, right, which is that 2468 is where the white zone is right now, right here. Notice that all these closes are above 2468, right? Notice that the next set of closes are all packed in about right here. Until we broke down that 37 to 27 area, all the closes were packed back in. My guess would be is if we get below the low, right, you'll notice that all the points of control for the most part are now auctioned over except for this area right here, and it's not prominent, okay? And so my guess would be that we could get back into this area right over here. That would be a correction, and I would look for responsive buyers to pop us back up, and that would be the balance. It would also repair the chart. I'm not bearish. I'm not saying the market's going to zero at all. What I'm saying is if we hold below the low and we start pushing lower, this is a logical place to look for responsive buyers, and it would repair the chart. And that's all I'm saying, right? There's other places, and there's big stretches, right? At this point, to get back in here would require a 24 to 64, 40-point stretch. So how we would attain that would be like a 10-point gap down and a 30-point roll, responsive buyers to close minus 20, then gap the next day and push right back up. Is probably what that would end up looking like, right? And finally, let's go sneak a peek at NQ. Okay, NQ. notice there's no prominent point of control until down here. It's not even prominent, but at least it's exposed, right? At this open gap down here where there's a big volume build. See this? There's a decent volume build there. There's an open gap. This is okay. Hasn't been tested. That's another potential location, but it came close. So this would be yellow. That would be white. Again, this is very loose, and then you'd have this over here next, right? There's no gap here. So this gap, this area, and then you take the 100, right? So if we close at 88, we take out 100. That says 58.87 to 57.87. If this is where we closed, so one of these two locations on an extreme stretch probably gets you a fat location for a move back to the upside, right? It's unlikely to move more than 100. If it moves 200, that's a melt day. And again, when you're looking at these tomorrow, when we do the zones, right? Notice there's going to be no prominent white zone anywhere in NQ tomorrow because there's no prominent definition in this chart, right? This is just long liquidation, right? Except I think at the very peak. It's all the way up here. That's prominent. See how there's nothing prominent here? Okay, this is definitely a change in character. Go back on NQ. What do the changing characters look like? All right, so if we go back, remember this day, a couple weeks ago, changing character, into balance, wide range on the balance, right? We squeezed the shorts up, we exhausted them, closed at the low. Notice the big sweeps come from gapping down, failure to close the gap, and then we start to roll. But even within this roll to the low, right? Notice 1 day closes at the low, 2 days close at the low. Let's count this as 3. So out of this whole move, 1, 2, 3, 4, 5, 6, 7, 8 days, we had, if we count from the top, we had 1, 2, 3, 4 days. Only 50% of those few days closed at the low. And of this whole thing, if you kept pressing to the short side on this, sure, you got some nice trades, but you got sabotaged up here by the longs, just crushed you, right? You need a driver to make the market really go down. And this is our last prominent swing low. So see when you went over here, everyone got bearish because we broke this swing low over here. And that would have been fine. There's nothing wrong with it. But you had to keep your closes below. Here's attempt 1, here's attempt 2, attempt 3. All these guys are the late sellers. All of them are trapped in between cash shorts and actual shorts. You started having people talk about 10% correction, trap back above, and push. So what's our location now? Well, the challenge is even bigger now. They're going to have to get below and close below 55.80. Otherwise, everything's going to get a response back up. And expect at the mid, right, to find responsive buyers. That's not shocking. The 50 to 62 retrace. I'm not a big fib guy, but that consistently nails location, right? So what do we have here? Well, it's interesting. Here's the 62 retrace on the bigger picture. This is the 50 retrace on the bigger picture. When you break that down, here, let's highlight that. So there's the 50-60, right? So let's go remove everything. Oh, hell. Didn't mean to do that. Swing low, swing high. Fine, we'll leave it like that. So a couple of important areas. Visual locations for this market, right? So notice we're trapped back under the old swing high. Just because we have a nasty day does not mean we go down. You'll notice that we crawled up for the last couple of days. This is our visual trap point, right? It's all it is. Notice we're backing up to the back side of that and having some challenges there right now. Okay, this is the top of the open gap. This is the bottom of the open gap. There's going to be traders looking to shoot a half of that modified open gap from point to point, and that happens to line up exactly with that 62 retrace. So if it were me, I'm willing to lose about 20 points at that 57.35 if I were swinging, because I'd be swinging all the way back up from that location. That puts me right in front of the 62 retrace on the bigger picture. It's the mid of the open gap. I'd be willing to bet that people are going to be getting very bearish if we get down here, shooting for this open gap. It's going to be bait for shorts. They're going to get about halfway there. People are going to start stepping in. They're going to start having to chase all the way back up. Again, that's a fantasy trade right now, but that's how it's very likely to look, right? And then finally, we know that even if we get underneath here, what has to happen? Well, you'll notice that we're coming to our last swing high from where we broke out, and we're finding responsive buyers. See that right there? So we have to hold underneath 58, 51, and then finally to really be bearish, right? You need to get a close and a hold below this level. That would change things, 55.78. But until then, I'm a buyer on NQ at strategic levels. And I'm a buyer, definitely a buyer on ES under any circumstances on rolls down. I don't care if we go into super bear market, ES snaps up predominantly. And it's very hard to make it roll lower. Even today, we're down 10 points. Okay, so is this a big deal? Well, if you'll look, we're on the 27th. On approximately the 11th, we were trading at 24.10. We're still 50 points up from 24.10, right? This is just the first day that we've pulled back, and that's all it is. So don't go and go, oh my gosh, we were down 100, we were down 60. Stay balanced, stay strategic in your trade locations, right? And we will continue to make money. If you get unbalanced, you get emotional about it, right? You're going to read every headline in the world tonight. Everyone's going to be bearish. Everyone's going to see, I told you we were up too much and all that. Just throw all that crap away and come in and look at where we open, what the rotations are, and how we can pull money out of the market tomorrow. That's it. Any questions? I'll open to the floor. I know I went fast. I didn't want to take all afternoon to do this. I wanted to kind of keep it brief and sweet. So I think on the white zones today, let's count this out really quick. And you should be tracking this every day from the first touch of the white zone. So this white zone failed overnight. You'd have to count that. It gave you plenty of time, but it just didn't work, right? If you took your stop should have been 4 or 5 ticks. This gave you, I think, 15 ticks or more to the downside. The first backside test, which was in our trade plan in the morning at 152.20, rolled you all the way down to, I think, 152.03. Yeah. So let's call it 04. So 16 ticks. Your risk is 4 to 5 ticks. 16 ticks, that's a 16 ticks potential, right? And the goal is to move your scale forward, trail down, right? And again, even if you think my goal was to get it to 151.26, right? But you have to scale as it's going along because it can reverse, right? Next CL, 2 trade locations, 1 hit pre-market. Right, first touch in gave you a rotation out. In order to get 10 ticks, you had to hold almost 2 hours to get it, but the zone did hold. The stop would not have been elected, and it was eventually worth 48.45 all the way up to 49.26. You'd had to have been a saint to hold it. I wouldn't have been able to, but I think I'd have gotten 10 ticks. First touch to 49.11 rolled you down to, took a little bit of time, right? It actually took a second dip in, but it finally got you to 49, your first 10 ticks. I would have moved stop to break even. Balance would have gotten stopped. I was at lunch when this occurred. And then finally, Euro was a pretty trade. There was only one. The green zone, as we know, is the weakest of the 3 zones. Yellow, green, white. First touch in the white zone, 2 ticks, and just that is a fantastic trade. I don't know how much that is per contract, but I believe it's $400 a contract, if my math is right. I'm not going to go through and calculate it. And then in ES, right? Let's just do the count. And I do this every single day. Why do I do this every single day? I want to reaffirm my decision-making process to not get anxious to have to take trades out of position, right? So on ES, the first goal was to take the white zone upon first touch. I did that this morning. I lost a tick, even though it gave the 2-point rotation. It took too long for me to work. I was uncomfortable. I made it about as far as I could in the morning before finally saying I'm punching out, right? Second touch in the white zone. Again, I was at lunch when this happened. I think everyone in the room who took it got 2 points. Move stop to break even. Trailer stopped. Profit, right? And then finally, the yellow zone was worth 2 points. First touch in, right? And then we have not achieved the white zone, which I would have been happy to take long, or I was happy to take the backside short up here at 68. I missed it by 2 ticks on the fill. Went to 47.50. I was sitting at 68. No fill. That would have been a very nice trade, obviously. And then on the white zone on NQ, right? So You see we pushed down on NQ, we came, wait a minute, that's not right. I've added that line, that's not a white zone. Something's wrong here. This was not a white zone. What was this? Open gap. That's what that was. Sorry. Is that right? Something's wrong here. Why do I have this dotted line here and not here? Guys, can someone tell me, is this the yellow zone that I had marked off here? Is that what this was? Does anyone remember why I put this line here? It's definitely there. It's the open gap. That's what it is. At any rate, the yellow zone gave it up on NQ. I put out a warning that, we shouldn't have gotten this move to start with. If you took the yellow zone, you got busted. Notice the backside test of the same yellow zone provided a great trade to the downside. Then so I want to point out something very clear. The stop is 10 points, right, behind the back of the white zone, the yellow zone and the white zone. This zone would have busted no matter what you did. You would have gotten stopped. You could have gotten your refund on the backside test. Again, NQ, when the volatility gets high, you've got to be a cowboy to be willing to trade that. There's no other way to put it. Okay? Then we come down, first touch into the yellow zone again, gives a beautiful rotation back up. This is 63 back to 83. They finally broke it on second touch. Yellow zone focuses only on first touch. And then we didn't get back up to the yellow zone for another nice short if it would have gotten there. But it didn't happen. I think that sums it up. It was a pretty good day, especially considering that this thing melted as it did. Any questions? Okay, everyone got paid, I'm assuming. I haven't heard anything negative from anyone in the room. These are the days, you got to love this when it happens because our zones work perfectly. It'd just be nice if it happened every day instead of every once in a blue moon, right? So 216, I'm done. I'm not putting on any more risk for the day. I'm not betting on the close of the low. Those who are, best of luck to you. It might work today. Okay, now I'm muting out. I'll leave the charts up till 3 o'clock.